Hello and welcome back to The Note. Are we about to see a new wave of M&A in the asset manager sector? Are the people who buy stocks for a living going to start buying each other? Well, it looks very much as though we might be, judging by some very interesting research that's been produced by State Street. With me now to discuss this is State Street's Head of Asset Management Servicing for Europe, Jörg Ambrosius. Yeah, thank you very much for joining me in London today. Hello. Let's take a look at one of the first parts of your survey. You asked us, I understand it's asset managers, where they saw opportunities to build their business over the next 3 years, and almost everybody seems to be interested in multi-asset solutions. What does that mean? Take us through what exactly the asset managers are interested in.
97% of the asset managers we quizzed said that they are positive in terms of expectations, asset growth. So we are in a growing market. But when you see at that chart here, you will notice that this is going to be heavily concentrated on multi-asset solutions. Why multi-asset solutions? End of the day, this is driven by the underlying investors. So the investor demand is going to change dramatically. It already has changed to some degree, but I think one outcome out of the research was that a lot of asset managers expect their clients to really be more interested in outcome-driven asset management. So you have a certain profile about your life, and you need certain cash flow, you need certain return, and you have a certain risk profile, and that is only being manageable by a multi-asset solution.
Okay, they're not interested in the classic model that we have at the moment of here is a manager who will manage some equities for me. They want somebody who is able to manage a variety of different things across asset allocation.
That's correct.
Now, does that mean that we're not necessarily talking about one company buying another? We're talking about rating fund managers, swapping assets so that people can have more different assets under one roof?
Yeah, when we look at the M&A aspect, that was also asked in the research, I think that has various aspects. So you could buy a firm, but you could buy teams, or you could buy assets. So absolutely right, if you're a player and you have a gap in a certain asset class, one way of closing such a gap was if you go and acquire a team that brings the expertise and the track record in that asset class.
Okay, let's take a look at this in more detail as to where people are most bullish. The US seem to be less expecting more deals than most of the rest of the world. Why are we seeing particular interest in Japan and Germany? Why is there less interest in the US, do you think?
Well, I think that's partially related to the structure of the asset management market in these countries. Right. So if you look at the size of the players, also from a global perspective, end of the day, this industry is moving clearly into a global environment, in a global competition. So a lot of the US players have already the critical mass. So they are not that much in this squeeze position compared to some of the other markets where you have a lot of smaller or middle-sized players who are now in a space where they are too large to be a boutique and to operate at a very cost-effective way, but they are too small to really get into the competition with the large global players.
Okay, now to illustrate that, let's take a look at this next chart. It's people in the middle, the squeezed middle, that range, which might sound like a lot of money, but it's now not really a viable boutique if you're up to $90 billion. It's those that are most expecting the deals. The small companies who you might think would be the ones who would get hoovered up are actually less interested in it.
Absolutely. I think there is still going to be a space for small boutiques, and they usually do not operate on a global basis, so they focus on only a couple of markets. If you look at these mid-sized asset players, especially if you go at the upper range, as you said, 99 billion, there you have to have a very strong infrastructure. You have, in most cases, global business models, which you have to entertain. And when you look at the regulatory space, and if you look at the increased demand, as we said, from the investor side, combined with the fact that there's a range of new distribution channels opening up to really entertain all that, this is very cost assuming, and therefore we, as a lot of the market participants, see that this mid-sized segment is under brutal cost pressure, and ultimately I think various players will not survive there.
Okay, Jörg, thank you very much indeed. The logic of the way in which the fund management sector is moving is very clear. There is a squeeze on in the middle. Either you are a passive player, in which case it's all about scale and getting very big, or you are truly trying to beat the market, trying to gain alpha, as they say in the jargon, and that means being small. Those caught in the middle are going to find it harder and harder to survive.